Trump just proposed 50-year mortgage loan options, but before you get excited, here's what that actually means.
Supply and demand. We just don't have enough housing.
Everyone's freaking out about the 50-year mortgage that just dropped, but I think it's pretty genius.
It's the same as renting in my view, so I don't like the idea.
So I've seen this idea of a 50-year mortgage being floated.
50-year mortgages, good idea, bad idea. What would your recommendation be?
What if I told you there's a way to afford the house today and the government might toss you $2,000 on top? Sounds like a cheat code, right? But here's the catch. A 50-year mortgage or $2,000 worth of stimulus may feel good for a minute, but won't make a significant impact to you in the long run. We'll hit two things: the 50-year mortgages, discussing the benefits, the costs, and the real dollar amounts. And secondly, talk about the tariff stimulus, how it could be short-term and potentially beneficial for those at the margins, but not a long-term solution. I'll keep it pretty plain and quick and not political, and specifically about your wallet. So this topic of the 50-year mortgage has started up a storm on Twitter. It really got people talking. A lot of people saying different things, talking about it's the best idea ever, it's the worst idea ever. I'm among the camp that thinks that it's one of the worst ideas. There are specific things that make it really, really unfortunate and kind of adversarial to the 30-year mortgage or even the 15. So let's use a real-life example to do the comparison. So let's talk about the real numbers. A $400,000 loan with a 7% interest rate, the payments would be about $2,600 a month for a 30-year mortgage. So over the course of a loan, if you add that all up, that's about $558,000 in interest, which is still a significant sum, a double the sticker price you pay for the home. But let's talk about a 50-year mortgage. So you would save a little bit over $200 per month in mortgage payments, which sounds great. It sounds more affordable, more flexible for those people. But over the course of the 50 years, you would be paying over $1 million in interest, which is more than 2 times the sticker price of the loan. That is just insane. And this 30-year and 50-year comparison, the longer the loan, normally they increase the interest rates. So it'll be even more expensive for someone who wants to pursue a 50-year loan compared to a 30-year. And yes, it is good to have a lower interest payment in the short term, and it means more flexibility for the family. But when you look at the building of equity in a home like this, it's really, really struggling to make a difference for the everyday American. Early on, basically none of your payment hits principal on a 50-year mortgage. The first payment at 7%, 3% goes to the principal on a 50-year mortgage compared to 12% on a 30-year mortgage. That is a huge gap. And to kind of give you even more perspective, 7 years down the line, you have paid down about $8,000 on a 50-year mortgage, $8,000 of principal, and on a 30-year mortgage, you pay $35,000. So that's a 5x gap in the amount of principal and equity you've built up. And then you also got to look at, when do you hit 50%? When is half of the home paid off? For a 30-year mortgage, this is around year 21, 22, no matter the interest rate. And on a 50-year mortgage, it's about year 40 or 41. That is a huge difference. Even if you plan on moving and changing location, if there's a drop in the price of the home, even just a little bit, you cannot afford to move. You will have no equity to take with you. So this is a horrible, horrible plan for everyday Americans like you and me. I'm a member of Gen Z that potentially is looking to get into housing. I know many millennials that are also looking to get into housing. This will set us back more than it will put us forward. And this isn't even taking into account that this is only a demand side inducement. I don't want to get into the technicality of economics here, but all we are doing is making it easier for people on the demand side to buy a home. Well, this specific proposal doesn't do anything to help fix the supply side issues. We don't have enough houses in the places that people want to live. That's why the houses are so expensive right now. So subsidizing demand and making things even more affordable for people who can already afford it is not going to be helpful. And unless we do something about the supply, these things won't really be checked. It won't really be fixed. This isn't a solution. So unfortunately, a 50-year mortgage will only make you house poor, longer with less equity. And if life happens and you have to move on a dime, you will have less money to build and move forward with your life. There are 3 groups who really benefit from 50-year mortgages. First are the lenders. They collect interest for 20 more years and a lot more interest over the term of the loan. The banks will definitely be happy to collect a long-term, a 50-year mortgage as compared to a 31, because they, as I mentioned previously, they double the amount of interest they're making, even though it's over a 20-year longer longer term. Per year, they're making more money with the 50-year than a 30-year. The second group that would really benefit is sellers and builders. Prices can stay high as buyers qualify by payment and not by price. The difference in $200, $300 in payments is the difference in an individual qualifying for a home and not qualifying. And the sellers and builders will definitely eat that up and sell you on the fact that this will make it a little bit more affordable and make more flexibility for you. So although you may not afford the home itself and financially it probably isn't in your best graces, builders and sellers will eat this up and say that, hey, this is $200 you could put in your pocket, not knowing the long-term ramifications. And finally, current homeowners would really benefit from this. If someone is looking to sell their house and can't find anyone with a 30-year mortgage that will buy it, maybe the fact that a 50-year mortgage is available and on the table will give buyers a little bit more flexibility, which would get the home off the hands of someone who already owns a home. So maybe houses will be snatched up a little bit quicker, and this in turn will give more money back to the people who are already homeowners and allow them to have more flexibility in their life, whether they want to downsize or move somewhere else. It's unfortunate that people are selling this plan and talking about it positively when in the end it is a really unfortunate circumstance for most. And I kind of don't blame Trump for this, honestly. I'm not going to make this video political, but he's being advised by someone who is very much embedded in the housing industry, and what would be better for him than to induce demand, make it slightly more affordable, and put more pressure on the housing market for the houses that are already there. There's no reason that we need to make things a little bit easier for everyone in the market when we could just build more housing. So I think this is kind of self-serving for Bill Pulte. Unfortunately, he has the ear of the president, and although the president could push back or could have done the research or had advisors that could look on the con side of things, I think he's just simply hearing this and getting told that this would be similar to what FDR did by championing the 30-year mortgage, when it would be an unfortunate circumstance for you and me and everyone else. And while Bill Pulte will be potentially profiting off of this, I don't think it's good for the writ-wide nation and will not make things more affordable. It would only create a little bit more demand, and that would potentially increase prices even more, which would be pretty self-serving for people who own homes or build homes already. So if you like this content, definitely be sure to like and subscribe. I'm trying to kind of get back on YouTube and push out more videos. I have a bunch of different videos about my personal finances, apartment hunting, credit cards that I've been using, and a whole bunch of other stuff that's always tangential to money, talking about personal finance and my life. And I think you really enjoy following my journey as well. Next, I really want to touch on the tariff stimulus. $2,000 of tariff stimulus for people making under $100,000. And this would be a pretty good proposal, but rather short term. Obviously, the people making under $100,000 are most hit by tariff potential increase in cost and spend more of their money every day on everyday things, and more of their income goes directly to buying things and products that could be potentially affected by tariffs. So it definitely makes sense to be giving this money back to people. But this is very short term. $2,000 will not change the lives of the people making under $100,000 as much as changing the tax code and triggering things that will give them long-term tax relief instead of just a $2,000 check. So yes, I think it would be a good thing writ-wide to have a $2,000 check to people making $100,000. It would definitely offset some of the tariff pressures that could potentially be on these sets of people, especially as tariff pass-through increases as the year goes on. But this is kind of a short-term band-aid, a little fix, but long-term, they'll be back in the same spot next year without a demonstrable change to their situation. The $2,000 check is nice, but if you're someone who makes $50,000, spends $40,000 each year, and then we see an increase in prices of 5%, that's another $2,000 that's taken out of your pocket right there. So it will offset things almost immediately if prices go up 5%. I'm not projecting that inflation goes up to 5%, but there are certain products and things that the everyday American buys that have gone up by 5%. So just if you are sneaking by very closely with your current income, these $2,000 will offset that for 1 year, but you will continue to see the effects of inflation and prices going up long term. I don't have a specific solution to this besides potentially changing the tax code to make things better for these low income populations, but in the long run, this is not going to be as helpful as that would be. So yeah, I know it's a popular topic right now, and the Trump administration wants to go through with these proposals, but this is my feelings on how it will not be nearly as effective effective or as promising as the Trump administration probably hopes. There are definitely things that are good in this proposal. I like the fact that they are seeing that housing is unaffordable and they want to make housing more affordable. But the 50-year mortgage is definitely not how to do that. And I like how they see the fact that tariffs or just low-income people are feeling right now, and they want to give them more money to make them feel more whole. But I think the tariff is a very short-term band-aid to a wider and longer problem of low-income Americans feeling stretched day to day.